As a bit of a background, LedgerPrime was a multi-strategy hedge fund. We were actually acquired by FTX Alameda. And so we're actually no longer active, but my new firm is Arbelos Markets. We're a principal trading firm focused on bilateral, like OTC derivatives, servicing institutions. I think one thing that we will set ourselves apart from competitors is in a post-FTX world, all of the counterparties demand a new form of doing business, especially around trading, that involves transparency. And so we're going to offer a new kind of product that will offer unlimited transparency to our counterparties to build a trust to service this new age of institutional counterparties. For us, it's more about providing liquidity to the market. Well, we're not a venture firm. It's not about just pure price going up. I think as the space becomes more institutionalized, if you look at traditional asset classes, it's not just about shilling or pumping token prices, right? It's about offering kind of structured products and servicing like the bespoke needs of institutions, which could involve hedging, which could involve yield. So institutions they don't just care about the price, right? They care about a lot of things that they need for their businesses. And so I think as an institutional liquidity provider, those are like the things that we're focused on. People generalize the space a lot, right? I think that's the wrong approach, right? I think, yes, there's a lot of tokens and projects that are absolutely too risky for pension funds or traditional capital. But I think as Bitcoin or Ethereum and other layer ones over time have demonstrated, they're very stable and safe over the longer term. Bitcoin has been around now for more than 14, 15 years almost, right? It's demonstrated a bit of the grow over time, more users, network, Ethereum as well. So I think people generalize the whole space overall, but if you look at what's stood the test of time, there are a lot of assets that I would deem as very, very institutional. And there will be many more assets like that over time in this space. We're definitely not, marketing very, very publicly to retail. I think like traditional finance, right? It's more about like the relationships, working like together with a client from like an educational perspective to understand their needs, structure products that cater to what they need. Like to miners, they need perhaps credit or hedges or yield. To foundations, they need to generate consistent cash flow. To macro funds, maybe they want more upside exposure. So understanding what the institutional players in the space needs allows us to basically work hand in hand with them to provide the products across, the counterparties in the space. Yeah, I think that's a good question. I think one is just transparency, right? I think given everything that's happened in the past year and a half in this space and the lack of transparency, a lot of trust has been broken, right? And so when you talk to institutions about the next iteration of infrastructure or funds or platforms, what they really focus on is trust, right? So we're getting asked a lot more about like tri-party repo, about like sub-managed accounts. They want to control partially where the funds are sitting and how like settlement, and more importantly, just transparency of the assets. So I think one is definitely just a lot more transparency for the counterparties. And I think crypto and blockchain in general, that's kind of like the value that we can provide versus traditional like settlement and clearing like rules, right? And rails. So I think we should lean into that, as an industry. And build these tools to offer the next generation of institutional products and firms. I think a lot of it is just education, right? I think there's been a heavy focus on just, retail, et cetera, in the space. We're focused on the price action. We're focused on just a lot of like short-term euphoria in the space, whereas that's not how pensions or, long-term funds necessarily think. And I think as the space grows and it starts to attract that type of capital with more regulatory clarity, with the ETF being approved, that will change. And I think as institutional traders, investors, it's kind of our duty to bridge that gap and fill that gap and push the industry forward towards that direction as the space matures.